Hello and welcome to this fresh edition of Indianomics, where we are looking at the state of the economy. The news is that the business resumption index created by Nomura is showing that India's economic recovery has slumped for all of July. That is coming after a significant recovery in June. This is not surprising, as India's total COVID cases are seeing the biggest single-day increase continuously for the last 5 days. To be sure, the COVID recovery rates are also rising, but there are two reasons why a high COVID recovery rate is not converting into a high economic recovery rate. One, many new and smaller states are seeing a surge in COVID rates. And two, many city municipal corporations and state governments are going back into lockdown. If you recollect, in the past week, Pune, Pimpri, Chinchwad, Aurangabad, Bengaluru, parts of Chennai, Kolkata, and several areas of Assam, Bihar, and Madhya Pradesh have gone into lockdown for a second time. Even as many areas in big metropolitan cities like Mumbai and Delhi have remained locked all the way from March. They never had an opening up and a lockdown. To discuss more about the early flattening of the economic recovery curve, but no flattening in the COVID curve, I have with me Aurudip Nandi, the author of the Nomura Business Resumption Index, Mahesh Vyas of CMI, whose Labour Participation Index is an important input into the Nomura Index, and Dr. Sudipto Mundal, economist and a senior fellow at the NCAER. He's also, of course, former member of the 14th Finance Commission. Gentlemen, thank you very much for joining me. Aurudip, first to you as the person who has created this Business Resumption Index. Can you tell us exactly how bad it is looking? If I remember your report right, this is the third week that the index is falling.
Right. So, good afternoon, Latha. It's the second week.
Okay.
So we've had 2 weeks in July, and we've had both these weeks the index fall. But I think let me caveat this a little bit. What we are looking in this index is very high frequency indicators, right? So this is like mobility data, weekly unemployment rate, weekly electricity generation. So we're looking at a set of data that we would normally not be tracking in our usual day-to-day life. But we are doing that because things are changing so rapidly on the ground, so we can't wait for monthly data. So what you're seeing for May and
which
June,
else, Aurudip? You gave me 3 indexes. You gave Google mobility, employment data, for which I will go to Mahesh Vyas in a minute, and power consumption. Do you get power consumption data that frequently? What else do you get on a weekly basis?
So we do get power consumption. We also get the Apple driving index.
Okay.
So we take a bunch of these. So even within the Google, we take a number of mobility indicators. We take workplace, we take retail and recreation, we take power, we take employment participation rate, and we take power demand.
Okay.
And so the whole idea is that we create an index that we can recreate back to pre-pandemic levels.
Fair point.
And then sort of see how that goes.
Okay. Well, just a minute. Let me get the employment number, because that is still news and we do not know. And Mahesh Vyas is with us. Mahesh, if you can tell us what has been the labour participation in the week gone by, and also put it in perspective in terms of how much we recovered and whether we are flattening like Aurudip is saying.
So insofar as the labour participation rate is concerned, there is a flattening. So I must also add that there is a continuation of a fall in the unemployment rate. But as we all know, that the labour participation rate is a very important indicator to keep in mind. And in the most recent week, we saw the labour participation rate remain stable compared to the previous week. The difference was in the second decimal point. So basically it is at 40.4%, which seems to have stabilized, or it seems to have even fallen. So in the week ended 21st June, this had reached 42%.
Okay.
And from there, for 3 consecutive weeks, it went on falling. And I can only say this, that in the last week, the fall is the second decimal point. It's not a big fall, it's an extremely marginal fall. But that's what the flattening of the recovery is, that we were recovering, then we went down, and we have kind of stabilized at a labor participation rate that is still a full 2 percentage points, 2.5 percentage points.
Okay.
And what the 2019-20 number was.
Okay. We're getting you in waves. We sometimes hear you and we sometimes don't. But can you give us one more number? You said the labor participation after reaching 42% has kind of flattened, fallen a little over the past two readings. What about unemployment?
So the unemployment rate has been falling. So that is slightly good to know. But this is almost entirely because of rural employment being on an upswing right now. We know that Manrega has been very strong in May and June, and I believe it's the case in July as well. The data is yet to be seen. But sowing is still going well. So June saw a very good increase in Kharif sowing, and this should be continuing in July. July is the main month in which Kharif sowing happens. 50% of Kharif sowing happens in the month of July. So I think it's a combination of Manrega and very aggressive sowing that's going on that's leading to a fall in the unemployment rate. Urban India is still not seeing a fall in the unemployment rate. It's still high.
Okay. Well, I'll come to both of you for more details on nuances on the regional color of both the recovery and the fall back in the recovery. But let me get Dr. Mundal in. Dr. Mundal, if you looked at the Nomura recovery rate, and the bar chart will come up for you, you can see it if your television is on. If you take 100 in February, we saw it go all the way down to 40 in April, and then we are recovering fairly continuously to come to about 70.5, if I'm not mistaken, in end June. And thereafter, there are two readings which are distinctly lower, coming down to 69 and then now to 65. That's the Nomura index, business resumption index, which means even with a goodish bit of recovery, we are only at 70% of the economic activity compared to a normal pre-COVID level of February. And then we have now fallen to 66% of the normal or the pre-COVID level. Is that a bit worrying that we have peaked off, and even the peak is only 70%?
Yeah, well, it's certainly disappointing. First of all, I haven't seen Nomura index. I'm just going by your description.
Yes.
And but it's completely consistent with everything that Mahesh just said on the labor force participation rate and unemployment rate. Because as he says, all the positive there is entirely driven by the migrant labor went back, the rise in Manrega, and the high sowing season. If you look at the urban side on his unemployment story, there's really no improvement. And that's consistent with what you're seeing in the Nomura sort of activity indices. It's disappointing, but that's where we are. As you know, we have assessed that in the first quarter of this financial year, output, and this is combining agriculture. There are some services which actually grow, like government service and so on. Others have gone flat or fallen. Industry certainly suffered very badly. So as a ballpark figure, we take it that it was down by about 25% in the first quarter. I'm still hoping that you take the second quarter as a whole, that is July, August, September, that we'll be down by about 17.5% compared to last year. These are guesses. I'm not pretending there's anything more than that. It's just our judgment that we will slowly recover. Maybe it'll be like steps, 2 steps forward, 1 step back, and so on. That's what's happening now. Because, the whole treatment of, the government level of how to deal with the crisis is also going in this stop-go fashion.
Yes.
They open up.
That is my point, sir. Until now, we have been assuming that April, May, June will be the worst quarter because of the severe lockdown in April and the gradual recovery in June. But the manner in which so many metropolitan centers, over the weekend we reported Pune, Pimpri, Chinchwad is one of the biggest auto hubs for the country, as well as used to be a pharmaceutical hub as well, Pimpri in particular. Aurangabad also, auto hub has locked down again. And then Bengaluru we know, Chennai we know. These are huge employment generators. And Delhi and Mumbai never quite came out of the lockdown entirely. So do you think you will have to revisit the theory that second quarter will even be a recovery, or am I being a pessimist too early?
Well, first of all, we are all in a zone of guessing. I don't know. I will still not give up that assumption that the second quarter will be a little better than the first quarter, because if you go behind all this to the underlying number on how the virus is actually spreading, and there you can't look at these numbers of cases and so on. That recording is depends on how much testing is being done, not being done, reported. A much harder number that I look at every day is actually the number of deaths, COVID-related deaths.
Very high.
And the growth, of course, the absolute number is high. But the growth rate of that, which was around 20% when we first introduced lockdown, is now down to about 2.5%. And there's a very steady decline in that. If you fit that curve, you will see that it's very clear. So you look at the absolute number on top, and obviously every day television report, highest spike. Of course, it's highest spike because it's rising on a larger base.
Yes.
Any positive growth will make it highest. But the rate at which it is increasing has in fact been coming down very consistently. The odd day you will get a spike sometimes, something was not being probably reported and they catch up. So that is there at the back of my head, that actually the deaths caused by the spread of this virus are increasing but at a decreasing rate. And if I just project this curve that has been going, I would imagine that by September or so, thereabouts, we will have reached what they call, flattening, which means that the absolute number of deaths stop rising.
Okay.
But, that means you really cracked the problem, and that's the ultimate. But before that, I think the growth rate itself will reach zero by, I think, sometime in August.
Oh, yes.
And that's the big thing.
Yeah, that can definitely lead to what you call V-shaped. But let me toss the same thing to Aurodeep. Aurodeep, what are your latest numbers telling you? Will you all have to revise your GDP numbers lower or higher? I think you were the first guys to say -5.
Yes. So we were the first guys to panic. And we're really happy that people have panicked after that.
But are you at -5 or are you panicking more?
Well, we are still at -5.
Okay. Go ahead. What do the latest numbers tell you, and are you going to change your numbers?
So sort of the leap of faith is that, we've been seeing flattening mobility for a while now, since mid-June. So, currently you're having states in this, Greco-Roman wrestling tackle between lockdown and unlocking. But the flattening of the mobility curve has been happening since around mid of June, right? Now, what we thought initially may be a blip has now turned out to be a trend over the past 3 weeks. Now, whether this flattening, whether this unemployment rate remaining sticky will translate into lower industrial production numbers, lower industry services numbers, and then will that translate to lower GDP? So I think there are a couple of leaps in terms of data which one needs to take into account. The second aspect is that, you are absolutely right when you said that, are we likely to see a replication of the Q2 lockdown situation in Q3? And if that happens, that's definitely going to be a problem, because look, imagine if you're a factory owner, you've got your supply lines and your demand lines, like people whom you rely on for supply and the people whom you give your products. Imagine if they are now scattered over a national collage of red, orange, and green zones, which means that you're never really fully recovering. So at this point, I think, the global environment remains weak. So we currently have -15.2% for Q2. Q3 we have -5.6%. It's really a very weak V, if at all. Then we've got -2.8% at the end of the year. And then we think that Q1 is also going to be a contraction of around -1.4%. So overall still -5%. But surely what this means is that the return to normalization, the risk of that being more prolonged than what people think at this point is quite high.
Okay. Well, I want to go to Dr. Mundal to ask him, therefore, how should governments tackle this? Is a fiscal push called for now or in September, where he thinks the curves will flatten? But before that, Mahesh Vyas, is there any other key takeaways that we should take on board from the data that you are collecting?
Well, I think the most important thing to keep in mind is that we should not get carried away by the recovery of June.
Oh.
There was something of good luck over there. The monsoon was really very good, and that really helped. There is nothing otherwise that would have made the scene look as good as it looks today.
Mm-hmm.
So, and this is okay. The Kharif season will be over very soon. What will we do after that? The government is almost broke. Mm. In the first 2 months, April and May, central government spending was a shade lower than a year ago. So the government has actually spent on an aggregate basis less. Mm. So what will we do going ahead is a worrisome question. Mm. We are seeing a flattening of the recovery cycle in the labor data. And as you pointed, the industrial towns have been shut down. The uncertainty of my town being shut tomorrow is a bigger worry. So labor will not come to work. And entrepreneurs will not open their enterprises because of the uncertainty.
Okay.
So, for example, a lot of people are living outside the city and they come into the city to work. But if they fear that they're going to get trapped again over here in one more lockdown, they will not come. So I think the uncertainty is still very high.
Okay.
The problems that we are facing in terms of not really having a strategy towards recovery, that is a serious problem. The government being more or less broke is another serious problem.
Yes.
So we have been lucky in the first quarter ending June for having a good rain and the government spending a lot on Manrega, but the future in this year looks bleak to me.
Oh, yes, it can't look otherwise, but it's just that whether we are taking the right policies. And that question to you, Dr. Mundal, now that we have a little more idea of how the COVID is spreading, how would you advise government to fine-tune policy? Should it rejig its expenditure heads into more of a health and humanitarian, and use that humanitarian as the fiscal push? Any modulation of fiscal policy?
You see, my sense is that, as we were discussing the other day at the State Bank conclave, what the government has done in terms of the fiscal stimulus, starting with the budget, the deficit that was already in the budget and the state budgets, and then the Atmanirbhar Bharat program and everything else in between the borrowing and what the RBI has done.
Yes.
I think there's been quite a lot of stimulus push on the demand side, but it will not translate into in recovery of output unless you do something with the supply side constraints. And those are all related really to how the virus is spreading and the government stop-go reaction to this and so on. So in terms of policies, certainly maximum emphasis on whatever the government can do to tackle the spread of the virus, partly the treatment of symptomatic patients if they're going to hospital, but also to try and contain the spread. It will spread. It will continue to spread. It's only the pace at which it spreads that you can slow down. That's where we have to go. So yes, I think rejigging of expenditure to push very much on whatever you can do in the short term. I mean, you can't produce more doctors overnight.
Yes.
But you can produce more drugs. You can produce, more ventilators. You can have more hospital beds and those kinds of things. Contact tracing can be improved. I think it certainly should focus on that, number one. Number two, to do all this, it's the state government that have to do this. It's not the central government. The central government can only play an enabling role. So give much more freedom to the states. You look at what a state like Kerala can do, but that's not the only case. There are a few other cases also where states have managed things reasonably well. So I think give them leeway to do that kind of thing.
To borrow more, basically.
Yeah. The other thing I would say I think the government has done quite a bit in terms of providing food support. It's not universal as I would have liked to see, but they've gone quite a long way in expanding the PDS and free food supply till November. I hope they will do the little bit more that requires to be done on that. But where there seems to be a blind spot is putting money in the hands of people, in terms of income support. They're still sticking to this, channeling money only through Manrega or channeling in through the,
PDS.
PM Kisan program, which are all, silos.
Yes.
What about those who are not covered by all this? And there's some mental block against this, but the point is that the highest multiplier effect you can get is you put money in the hands of poor people. It's a no-brainer. Their savings rate is zero. They spend every rupee that they get.
Okay.
So the strongest multiplier effect you get is from them, not from middle-class people like us or rich people who have, put away part of their extra income as savings.
You're advising some helicopter money.
I don't like that term because, that's the kind of thing that will put people off.
Okay.
I would stick to you saying in income support to people.
Okay.
Universal basic income is the term that is gained currency.
Universal basic income to everyone who does not pay an income tax, in the sense who's got a salary.
Well,
therefore.
even that, if you want to, actually, I don't think you need to do any targeting because it's so small.
Fair enough.
The other day, gave you the arithmetic, you're talking about 1,000 rupees per household.
Yes.
It comes to all households, about 20% of them, including people like you and me. We will not use it, obviously. We're not going to line up to collect 1,000 rupees. Actually, it's really...
so anyone who lines up to collect should be given.
That's right. That's the only filter you need. And then once they collect it, you stick them with, this indelible ink thing.
Voting ink. Okay.
For years, decades in the election side.
Yes.
Follow that and don't need any more elaborate targeting. In fact, the money you'll save in terms of the elaborate targeting arrangements will more than pay for all this.
Okay.
So these are the 2-3 things I would say the government needs to do now. These are short-term measures to revive the economy. Tomorrow is another day when we'll have to think about how to get the economy back on track in terms of fiscal rectitude and managing the extraordinary liquidity that's being created and so on. We'll have to deal with those,
when they come.
Medium, long-term problems, hopefully by next year.
All right.
If we get back to something like stability.
Yeah. The immediate problem is demand, and so use the existing administration to push more demand into the system. Out of time, Aurodeep Nandi, Mahesh Vyas and Sunita Mundal, thank you very much for joining me in analyzing the state of the GDP curve and the COVID curve.